If this news report is true, silver, sitting at or near an all-time high, could skyrocket from this point forward, and it's all because of what JP Morgan is doing. I'll explain as we explore. The silver market is at a critical juncture right now as it has reached a new all-time high. It is near sort of a balancing point. Yes, a delicate balance here with the dollar and also silver itself. How did I get that thing to stay up there and spin? Well, I don't know, but it's there. Hopefully it won't upset this piece of silver and it won't fall over by the end of this video, but I have a feeling I'm going to get too excited and it's going to fall over. Stay tuned to find out. We're still in the world of unknown there, but JP Morgan, we know, has the world's largest stockpile of physical silver in the world. And they're really custodians of it through their SLV ETF. And many people feel that JP Morgan is at the crux of a price suppression scheme. Now, I'm not quite as convinced on that. However, we do have what we know has occurred in the past with manipulation in general that JP Morgan has been convicted of and had to pay over $900 million fine. And it's massive, and their whole trading desk has been wiped out because of it. Nonetheless, this is something that's big news because they hold over 750 million ounces of physical silver. And according to the Economic Times, it has just added 21 million ounces in the past 6 weeks. It's a staggering move in a market already under pressure. Between June and October, JP Morgan reportedly sold off its entire 200 million ounce paper short position. This freed cash to acquire physical silver, leaving the bank both long and physical and in paper silver for the first time ever. Never before since the beginning of the ETFs that really kind of took off in 2006 has this ever happened. Experts say this is a rare and powerful market position. Now, I have been reporting about how large hedge funds have been moving more towards a long position. I've been reporting on that for several months, but this takes it to the next level. The move has coincided with the United States Mint announcing that they have a shortage of silver coins or blanks to make their silver eagles. Physical supply is tightening while demand is rising, including, I guess, to some extent into the retail market. But I say that with some sort of trepidation because there's been a lot of selling as well, which means my guess is there's not going to be as many orders for silver eagles from the authorized purchasers in the coming months. But nonetheless, JP Morgan is holding real silver, not paper contracts. This is a key difference from what the Hunt brothers did to corner the silver market in 1980. Back then, reliance on paper contracts led to intervention and collapse. JP Morgan's approach reduces risk of regulatory disruption. If history is any guide, silver could move sharply upward. Adjusted for inflation, silver's 1980 peak would be over 600 ounces today, although by my calculations, it really would be about $213 or $216, but there's different ways to measure inflation. But also, inflation is also conflated with price increases. And with that, with prices increases in the market, the way the market works, it could go either direction and you can make it say pretty much what you want. But if you use shadow stats, probably likely it is going to be somewhere thereabout. Nonetheless, whether you're buying silver or selling it, my friends at Summit Metals, they want you to know that they are there to help you out. And not only in terms of great customer service, but they have a lot of services that they offer on their website, and they're always available by phone or email to experience if you have any questions. And they also have a great selection of products for silver and gold and also platinum. I'm glad they're carrying platinum as well. So check out Summit Metals by clicking on the link down in the description of this video. So we see this massive spike in 1980, but as I have said, the 1980 price peak should not be the measure. It should not be the guide as to where we need to get for a record high because it was so different back then. If we adjust for inflation from 2011's highs, which is much closer, then we need to get to about $74 per ounce. but industrial demand is rising, mine supply is falling. Well, and that's and it can be argued as well. Mine supply has picked up over the last couple of years, but not nearly enough to meet the demand. Institutional accumulation is accelerating. That is true. The paper silver market is massive, estimated at 50 times the size of physical supply. And I don't know that I agree with that either. In fact, I think it's between 350 to 400 times the size of the physical supply. COMEX open interest is about 244% of registered silver. Lease rates have climbed to nearly 30%, a sign that physical silver is in high demand. Recent market volatility even caused a CME server outage, showing strain in the system. JP Morgan moved 169 million ounces from deliverable to non-deliverable vaults, equal to roughly 9% of the annual global supply. Physical silver is now harder to source for that type of silver. Now, the type of silver you see here is quite common. You can get it anywhere on any bullion dealer's website. In fact, that's why, even though the markets are rather tepid and they could fall over at any time, the way this article is talking about, but there is an ample supply of physical silver for you if you want to buy it. And some places are even selling it at spot or even cheaper. In fact, Summit Metals has a deal for first-time customers, 5 ounces of silver at spot price. So this is what we're looking at here. And analysts say that the market is entering a critical phase. Years of debt, money printing, and industrial demand have stressed the system out. Now, with physical silver tightly held and paper contracts at risk, the market could face a dramatic surge. Silver historically moves fast. When it does, waiting can mean missing the opportunity entirely. Investors are being reminded that silver is wealth insurance. That's why I don't like to refer to it as an investment. I like to look at it as a hedge. I like to look at it as something that is money in and of itself, commodity money. It's just a different form. It's sound money as opposed to the dollar. The dollar is indeed unsound money, and it is losing value by the day. Inflation is still hot and heavy, although not as bad as it was before. It is still pretty bad. So that's why we hold on to silver. And so we think that with this and what we're seeing with going on in the markets, the convergence of a structural deficit, stressed paper markets, and massive institutional accumulation, this opportunity is certainly something that we can see. But if JP Morgan's long position signals that the most powerful market players betting on higher prices, likely that could mean they could spike up dramatically, because they got to get the silver to back up the institutional buying, the hedge fund managers making large positions, large buyers into the silver ETF, governments like Saudi Arabia getting into ETFs. All of this stuff means there needs to be at least some more silver to back up. Even if that ratio widens between paper silver and physical, they got to get it in there or people are going to lose trust in it. Many investors are watching closely, and it could be an historic moment in the silver market, reminiscent of what we saw back in 2011 when adjusted for inflation, although the jury is still out if it's going to go up as high as they say here in this article, that it could be reminiscent of the Hunt brothers. I don't think the only way we can make that true is if Jamie Dimon himself bought a whole bunch of silver, or JP Morgan bought a whole lot more than what would need to meet the ratio of trades in the SLV. And I think that's the only way we're going to see Hunt brothers type situation, or else a coordination of several billionaires get together like David Bateman and make coordinated purchases of 1,000-ounce contract size bars for physical delivery in vaults of their choosing outside of the system. That's the only way that's going to happen. And I even doubt that will work. Unless, I don't think you can get that many billionaires to agree on something and do it. Nonetheless, they would also need to probably have the same mindset and to be able to make that to make that occur. And notwithstanding, they may actually choose to do it through bullion dealers like Summit Metals to buy monster boxes of Eagles and the like. But we'll see. And so when we saw 1980 prices reach $48.70, why did they fail? Because they relied on paper contracts and borrowed heavily. leaving them vulnerable to government intervention. JP Morgan has bought physical silver, but I think they're doing it in order to keep up with the demand from the ETFs. And they're kind of running behind there, but I think that's kind of what's occurring. They're the largest custodian, but does not necessarily mean they're the owner of them per se, although if you don't own it, you don't hold it. And if they're holding it as custodians, you can make a cogent argument that they do own it, right? The SLV holders who buy SLV and other ETFs, well, they essentially are just buying the exposure to silver's price. Hardly any of them will actually stand for delivery or ask for delivery. But we'll see. I think if they were to do it, there's a lot of hoops to go through in order to make that happen. I think some have talked about that back in their silver squeeze movement, where some have actually made that happen. And there's one dealer who actually took those 1,000-ounce bars and sliced them up and sold them out to others. And I think that's kind of a neat idea. It'd be kind of wild to see that happen again. But the silver market has been strained for years. COMEX open interest is roughly 244% of registered silver, meaning paper contracts far exceed physical supply. Even if a fraction of holders demand physical delivery, the system could face extreme stress. And maybe people feel this is the time to do it. And if they were to do it, well, I think that could be a game changer, and that could cause the price to absolutely erupt from here. Let me know what your thoughts are in the comment section down below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.